There are a couple of themes that we certainly need to touch on today, but I'm going to open the court to you effectively and say, what are you watching right now? What are the interesting trends that you've seen into this first week as we see the market coming back to their desks?
Yeah, I suppose the key is for everybody at the moment is risk appetite. You covered it a little bit with Eric. I think for me, the key point is looking at FX markets and trying to see what signals they're giving us at the moment. And historically, obviously, from up until 2008, a weak yen was seen as an indicator that we have a lot of risk appetite. And a strong yen was seen as risk appetite waning and people selling off riskier asset classes. More recently, obviously, through 2009, we saw that really reversing into being the dollar play as, again, dollar interest rates being slashed to zero, being a major funding currency. For first time, really, it's competed with the yen in recent past, since the early 1990s. And that is a key phenomenon. So you've got people now saying, okay, so if dollar yen's going up, does that mean we've got risk appetite coming because yen's weakening, or we've got risk appetite waning because the dollar's bouncing? And that's, I think, a very key
So
key
which
aspect.
side of the coin do you lie?
Well, I mean, I suppose it comes down to your view on interest rates, and I think we still feel that the dollar is the better indicator overall, because despite a lot of people saying that the economy in the US is rebounding, therefore rates have to go up, and we can come back to the sort of Taylor-Bernanke aspect of that. We believe that US interest rates will not actually be hiked until Q3 2011, so not this year at all, and even into the second half of 2011. So for us, we feel that the US economy is going to falter, and we feel that therefore that inflation is not a risk, deflation is a risk. We can talk about asset bubbles as a separate part, but consumer price inflation is not going to be there, and therefore the Fed is going to be talking about an exit strategy for the next 18 months.
So you see the US economy faltering. You talking as far as a double-dip recession? The house view is no. I'm still very fearful of that, I must admit. We're still looking at around 2% growth. You've seen forecasts, obviously, some people talking about 5% growth. Well, that's what the stock market is certainly factoring.
It certainly is, and I think that's a huge concern. You talked about the IPOs in emerging markets outweighing developed economies. Obviously, that's partly because nobody was selling any equity in developed economies, not as in IPOs at least. So that is part of the feature. But you look at valuations in emerging markets, the highest since 2000 in terms of price earnings ratios. I think the market is set up for an extremely positive outcome in 2010, which we really doubt we're going to deliver on.
Commodities, we were focusing on these yesterday on the show, and looking at the last decade. Copper up some 290%. We've got oil up 210%. Interestingly now, oil just below that $81 a barrel level, and we had the likes of gold up 280%. This is all in dollar terms. Do you see, now obviously with your bearish outlook and a faltering US economy, I mean, you can't be positive on the commodity story, because the economic growth story is what is fueling the momentum in these prices? Yeah,
absolutely. And I agree with Eric in terms of him saying, if you're going to go against the current trends at the moment, you're really going to get knocked down by that train coming at you, because there does seem to be just a huge amount of momentum behind these trades. So, I mean, you've seen very strong gains in commodities today. You saw the platinum go up over 2%. We do see further gains coming into the beginning of this year. The question mark is how long that will take to reverse out, in my opinion. I think we are getting frothy in markets now. Bubbles can go on for a long time. The housing bubble in the States was started, in Taylor's opinion and my opinion, from the bailout of the hedge fund in the States, long-term capital management or short-term capital mismanagement, whichever one you want to call it, in 2000, 2001. And that really led to rates being too low for too long, and that led to the housing bubble, which took until 2007 to burst. So we could see this go on for another, I don't think we'll get that, we won't get 5 years, but we could easily see 3-6 months of this continuing before it all gets very painful.
Well, Steve, I know we're going to have many robust debates over the 2010 period around commodities and the economies, both globally and in South Africa.